you could have invested in gold when they first realized gold is a store of value, you'd be very wealthy right now. And I think that's the same sort of place we are with Bitcoin. I've spent years and years advising actual people on how to grow their long-term wealth to give them the life they want. So when you're talking to individuals, before you even ask about any money, you kind of need to know what do they want to do with their life. Well, the Bitcoin generally is going to outperform the stocks by quite a margin. So very, very quickly, you're now not 20% exposed to Bitcoin. You're probably 30 or 40% exposed to Bitcoin. So an ETF allows large quantities of capital from the traditional market to access Bitcoin without having to create the additional infrastructure to own actual Bitcoin. Paradoxically, the traditional world and the Bitcoin world kind of need each other to survive, or at least to fulfill their potential. Bitcoin is the safest bet in the digital asset space, and it's the foundation of the digital asset space. And I would imagine other stuff would trend downwards versus Bitcoin. And so that's why I decided we should be a Bitcoin-only asset manager, because that's what I would personally do myself. So therefore, that's what I'm personally comfortable telling people to do.
Hi, Peter. How are you doing? Everything fine on your end?
Great. Thank you very much, Robin. How are you?
I'm doing, as always, really good, being on a Bitcoin podcast.
It's the best job in the world, isn't it? I think it's the best job in the world. If you could get paid to talk about Bitcoin all day with people that like Bitcoin, what a great job.
I often think about that, and I put a lot of videos out with retirement on Bitcoin because this is something that people are really interested in. But I often feel like I stand up and I can talk about Bitcoin all day long, and I can call this thing my job. And yeah, there's a lot of organizational things. There's a lot of like strategy behind the podcast and all those things, like a lot of things that are non-Bitcoin related. It's just like podcast and media related. But most of it is Bitcoin related. Yeah. And so like I get to do the very thing that I dreamed of doing 2 years ago. So I'm kind of already retired in a sense, even though I could not live from my money forever. But like in that sense, I'm retired.
Yeah. Like you get up every day and you're like, oh, cool, another day.
Yeah, has some. I don't know if you experienced that. I mean, it's a whole different topic that I wanted to get into, but it's interesting. I have sometimes those days where I just stand up in the middle of the night because I really want to do something. Like I had an idea. I was like, oh shit, like I have to do that now. And I get out of 4 a.m. and my girlfriend's like, where are you going? And then I go to the computer. I have an idea.
I think when you do that, you've got to get it out of your head. Otherwise, you're not going to get back to sleep anyway. Like I find if I have something like that in my mind in the middle of the night, it's impossible just to go back to sleep and forget it. So I think it's good to get up, do something, and then, you can go back.
The only bad thing is in 9 out of 10 cases, you look at the same idea like once you're waking up and you're like, oh shit, that was not that good of an idea.
I wish I'd stayed asleep.
But anyways, with that being said, let's get into the podcast. And before I get started with all the topics, maybe give the viewers a little bit of a background, who you are and why you're excited about Bitcoin in the first place.
Yeah, so I'm Pete. I'm CEO of Jacobi Asset Management. We launched Europe's first Bitcoin ETF a couple of years ago. My background is I was working in the City of London in wealth management. I started working the very day Lehman Brothers crashed, which ironically was what sort of triggered the financial crisis, which Bitcoin then was sort of invented to, say, well, this is the way we should be doing it. So it's really, really incredible timing. And I was, for a good, 15 years or so, was advising high net worth city professionals on how to then grow their long-term wealth. And then sort of I met Bitcoin and I thought, hold on a minute, this is an even better way to do it. So we think that if you can take the traditional world where people have been saving up their money for years and years and years, and then blend Bitcoin with it, then that's only going to help them out long term. So that's the sort of reason we went down that avenue, because there's so many traditional products that people have their money invested in which can't accept Bitcoin or can't access Bitcoin. And so, that's a huge problem in my opinion. You need to bridge the old world and the new world in order to allow people to access into Bitcoin, but also to allow Bitcoin to gain mass adoption and fulfill its, prophecy of becoming, a currency. So I think paradoxically, the traditional world and the Bitcoin world kind of need each other to survive, or at least to fulfill their potential. So yeah, we started Jacobi basically to try and find a way of people being able to safely, securely invest in Bitcoin who aren't sort of tech savvy crypto native investors. And so when you talk about Bitcoiners, most of them are very, very happy and comfortable to buy their own Bitcoin, custody it themselves. But from my experience of working with, just regular, people who invest in all sorts of different things, but basically just want it to be simple and easy, they probably don't want to spend all the time and effort to learn the new things. They just want to get on with their own life. They want someone else to take care of their finances. They want to say, I want to retire at 60. I need this much money. Can you tell me how to do it? Those sorts of people need help to then bridge what they've currently got into Bitcoin. And I think that's why products like ours are really important, because if they don't have that, then they're either not going to buy Bitcoin, or they're going to have to learn something they don't really want to learn and probably won't do it.
I want to zoom in on one thing, because I feel like it could be a fun thing to talk about. How was it to start on the very day the financial crisis started?
It was weird.
It's like you're getting onboarded and all the news are coming out and you're like, is that a normal day?
Yeah, so it was my first job out of university. And on your first day in this company, you kind of start at 10. So your manager's got all this time to get all this stuff together. So every day, this company I worked for was like a proper old school boiler room, like get on the phone, cold calling sort of situation. So every morning there'd be a sales meeting or like a, get people going, kind of feed the dogs sort of meeting. And so I missed the one on the day I joined. I obviously wasn't in because I started at 10 while my manager was sorting stuff out. Then later on that day, then, Lehman kind of crashed. And I didn't really know what he was talking about. I did a marketing and management science degree and then got a job in wealth management. And then, so the next day was my first ever morning sales huddle. And they was like, don't worry, we're not going to shut down. I'm like, wow, what a start. So then the meltdown of, I don't think it was fully appreciated, the scale of what was going to unfold. No one knew that very, very day, especially not me as like a 22-year-old straight out of university into the city. But what it did teach us is that things were really quite hard because people were worried about investing. People were losing their jobs. They were losing their money. The last thing they want to do is, accept a phone call from me saying, do you want to invest some money? So that made doing our job really, really difficult. But we didn't know any different because that was normal. So my first day or week was one of the worst times in a lifetime to start doing it. But if you could then actually survive or maybe not thrive, but survive, when times turned a bit easier, well, then it seemed really easy because you learned to do your job in the worst environment there's been in, decades. And so it was quite a funny time that people, even though they were worried about losing their jobs, losing their money, they still kind of wanted help because financial advisors do well in most scenarios because when things are going well, people want to talk to them to find out how to make more money. And when things are going badly, they want to talk to them about how do they not lose their money. So even though it was a really, really bad time for the global economy, it wasn't necessarily an awful time to be in the wealth management game because people wanted to talk to you. But yeah, it was strange, really. It's funny looking back in hindsight that I've now ended up in Bitcoin, which is a direct result of the crash and the financial failures of the fiat monetary system. And I've come full circle almost.
I guess it's similar to the people that come into Bitcoin at the very top of the market and they buy in, and at the next week, all of a sudden the bear market starts and they experience like a downturn of like half a year or a year only down. You kind of get hardened, and then when the bull market starts, you're like, oh shit,
yeah, this is it.
I've learned it.
Yeah, that's. I was thinking about this yesterday. Actually, it's all well and good saying, yeah, okay, I've learned about Bitcoin. I'm going to invest in Bitcoin. Now, I think there's two types of knowledge. There's learned knowledge, then there's earned knowledge, and they're very different, especially when you're going through a Bitcoin cycle. And I think the key thing, the key attribute you need to be a successful investor, especially in Bitcoin where it's volatile, is resilience. So forget about timing the market, thinking when is it going to go up, when is it going to go down. It's dealing with absolutely doing nothing. And that's a really difficult thing to do, especially when markets seem to tank, that everybody thinks they need to do something to negate the problem. But whatever you do is probably going to not be the right call. So there's quite a lot of studies that show you're better off in all investing, not just Bitcoin. You're better off just staying invested, because if you knew how to time it, you'd already be a trader somewhere else anyway. So the best thing to do is just put on the kettle, make a cup of tea, go and do something else, and let it do its thing.
Absolutely. And you said you kind of founded the first spot Bitcoin ETF in Europe, was it, or like in the UK?
Yeah, so our fund is domiciled in Guernsey, which is a UK offshore crown dependency. And so in 2021, we went to them to see if we could get a Bitcoin ETF approved. At the time, there were no Bitcoin ETFs in the world, but in the process of us seeking approval, the first ones to list were in Canada. Then there was, I think, some in Brazil. Then we were approved in October 2021. So in the European market, there were already crypto exchange traded notes. So it wasn't as if there was no Bitcoin products. There were some products, but a debt structure instead of a fund, which the majority of the exchange traded world is. I think 90% of exchange traded products around the world are all exchange traded funds. And so the European market had some exposure and some access in some countries, but in the UK, they were banned in 2021. So the UK has really been starved of any sort of Bitcoin exposure in terms of traditional products being able to access it. So we had our fund approved in 2021. And then the next thing we needed to do is go and get it listed somewhere relevant. So usually a fund, if you get a fund approved, you would usually list it where you get it approved. So for instance, in America, the SEC approved both the funds and the exchange. So immediately as they approve it, they can list the next day, which that wasn't the case for us because we needed to think outside the regulatory and the existing legal framework box to say, how do you get a single asset ETF approved, which you usually in the European market can't get a single asset one approved, and you certainly can't get a Bitcoin one. So we needed to work out how do you actually get a single asset Bitcoin fund on an exchange, on a relevant exchange, which you'd obviously want to do to get maximum exposure. So we had our fund approved in 2021 by the Guernsey regulator. We then got it approved to be listed in Euronext Amsterdam in the Netherlands. And then just as we were about to list, FTX crashed. And then so that basically pulled the plug on it for a while because it'd be commercially suicidal to have listed it at that point when everyone was fleeing and running for the hills. So we didn't then list it until, say, a year or so later. And then we listed it on the Euronext Amsterdam in August 2023. But then we still couldn't sell to retail under regulatory restrictions. So only recently have we managed to be able to get the Guernsey regulator to remove the investment restrictions on it, to now be able to get onto all the exchanges and all the trading platforms and sell to retail investors. But still working on the FCA to be able to sell to the UK because that's still banned.
How it's always especially with retail, I always wonder why they not just flock into Bitcoin directly. So what's kind of the use case or the clientele that says I'll buy a Bitcoin ETF, and do you think there would have been any chance that they would have bought Bitcoin in any other way?
So I think they would do both. So I think if you're a Bitcoiner and you've got your money in your bank account and you can just go and buy Bitcoin, you would. If you've got money in a traditional savings account or like a pension account, or in the UK, we have ISAs, which is an individual savings account where you get tax-free growth and then you can take the money out tax-free. So it's a major source of savings vehicle. That can't hold Bitcoin. So if you want to pay no tax on your Bitcoin, well, you need to hold it in a wrapper that charges no tax. So either you live in a no tax jurisdiction or you use a no tax product. So in the UK, there's 750 billion in ISAs, which can't touch Bitcoin. So that's the reason you would buy a Bitcoin ETF, because this money can't buy Bitcoin. Your other money can buy Bitcoin, but you've got different pools of money depending on the products you use, depending on the country you live and the tax efficient products that country allows you to use. And so Bitcoin can't fit in all of them. And so a Bitcoin ETF is perfect for some of those products.
Are you seeing that the people that buy those are already orange pilled and just trying to get those money into Bitcoin, or is it actually that people haven't had Bitcoin and you kind of educate them, probably both a little bit?
It's mostly, I would say at the moment, already orange pilled people, and they just want exposure via the products they've already got. So again, back in the UK, if you want tax-free growth on your product, you have to use a specific vehicle. If you want a tax-free growth on a pension product, like a retirement product, you have to use that product. So these are the ones where people that are already orange pilled, they've already got a load of money stacked away. They just can't buy Bitcoin with it. And I think they're the first people that will start to buy Bitcoin in an ETF with these products. But I think gradually, as the more and more it goes on, I think people are now starting to be more aware that they need an allocation to Bitcoin. These products make it easier, because if you're a non-Bitcoiner, but you want exposure to Bitcoin, Do you want to just use a product you already know, you already have, and you just click Bitcoin ETF button? Or do you want to learn about the whole process of how do you custody Bitcoin yourself? Most people, from my experience of working with investors, they don't really, they go to work, they look after their family, they go on holiday, they've got their own problems to deal with. They generally don't want to go and learn new stuff. Like people I find, once you've left school or university, usually people don't seek to learn new things. And so when you're an investor, you basically deal with an advisor who does the learning for you. And you say to them, okay, this is what I want, go and do it for me. You probably wouldn't then go and do it another way that you're not comfortable doing. So given the fact you'd already know about ETFs, you'd already have these traditional financial products, it's easier for somebody that isn't really that, super duper bothered about self-sovereignty and that sort of stuff. They would just buy it because they want exposure to Bitcoin without having to do too much new stuff.
It's interesting. So it's the one side, like meeting people where they are and kind of unlocking capital, but also it's a new pile of money that sits there, wants to get unlocked, and people, even Bitcoiners out there, and they're like, hey, I have that retirement account, I have that ISIS account, I want to get that into Bitcoin, and they can't. I think in Austria it's not even possible because you're even more restricted than in the UK, it seems like. But it's interesting. It's basically a whole new pile of money that without ETFs wouldn't even be able to get into Bitcoin.
Yep. So just going back to the numbers in the UK. So in the self-invested personal pension market in the UK, there's £500 billion that can't go into Bitcoin. And there's £750 billion in ISAs. So that's £1.25 trillion that can't buy actual Bitcoin. Now, if you look at the other savings accounts people have got to then go and access Bitcoin with, well, that would be their surplus cash on a monthly basis. That would be savings accounts or cash accounts or whatever. So the pool of money that can't touch Bitcoin at the moment is massive, absolutely massive. So the people that are already into Bitcoin, well, they already spend all their money buying Bitcoin. So to get the price to shoot up, you need new people to come in, and you need them to come with large quantities of capital. So an ETF allows large quantities of capital from the traditional market to access Bitcoin without having to create the additional infrastructure to own actual Bitcoin.
That's so 1.5 trillion pounds. That's about 2 trillion US dollars. And that's just in the UK that cannot buy Bitcoin, but might want to buy Bitcoin.
Yeah, but there's also more than that. So that's the self-invested market. So that was, let's say I've got an individual savings account. I've got an individual SIP. So I make those decisions. That doesn't include the other pension money. So in the UK, every company has to offer a pension, and they contribute to it, and the employee contributes to it. They get the tax benefit of doing so. So let's say, for instance, you earn, I don't know, £5,000 a month. You would then pay £2,000 tax, and you get £3,000. If you then put that £3,000 into a pension, the government give you back the tax. So you've got £5,000 in the pension instead of £3,000 in your pocket. But on top of that, the company you work for have to also contribute. So you could then have another £5,000 put into it. So for the sake of you having either £10,000 in a tax-free pension environment or £3,000 in your bank account, you're going to take the pension all day long. So this is the money that you want to be able to buy Bitcoin with eventually. And so when people work for a specific company, they have a specific company pension scheme in place. Those people can't control the investments that are within that pension. So there's probably another £2 trillion of pension money, which pension funds control. So I would say there's probably £4 trillion of just UK money that can't touch Bitcoin yet.
And 4 trillion pounds are, wait, that's like 5 billion, 5.5.
What Bitcoin is now, yeah?
Yeah. That's 5.5 billion US dollar. I just want to make the US dollar because like most people are in the dollar that watch. That's a lot of money.
So that's how early we are, isn't it? So even if people wanted to, they physically can't. And you're not going to. So you would be crazy to say to your employer, no, I don't want your free money. And you'd be crazy to say to the taxman, no, you keep my tax and I'll take only say 30% of what I could have invested if I kept it in this plan. So even if you took that 30%, you'd have to do really, really well. And Bitcoin probably out over time would mean that you outdo it if you can't hold Bitcoin within the product. But if you can start at either £10,000 or 3,000, it's a hell of a head start to start at 10. And if that 10 can now start to invest in Bitcoin via ETFs, well, then the compounding of that is insane.
Yeah, and it's like a 5.5 trillion US dollar Trojan horse that is 2 times as big as Bitcoin right now.
Yeah, like that's just our little country. That's just one country.
Yeah, it's not the whole Europe. It's just UK. The whole Europe is probably like, I don't know, like 10x. I have no clue what the numbers are, but like a lot more than just UK.
Yeah.
Like Germany, France, Austria, all those big economies and money pots. It's actually, so how far would you say are we in this like shift with traditional money that is locked up and cannot come to Bitcoin? Like, are we even scratching the first 1% of coming there?
I would say no. I think in this country, in the UK, I would say we're nowhere near it. And I talk to a lot of multi-asset fund managers, and I think Bitcoin's role in a multi-asset portfolio will become completely normal in a few years' time. But I speak to quite a lot of them. I say, when are you going to buy Bitcoin? And they say there's no demand. And the reason there's no demand is because where the regulators ban it, investors can't demand it from their advisors. So the advisors can't demand it from the fund managers. So the fund managers have got no need to try and do anything different because they've got nobody complaining. They've also got no other fund managers adopting it who are now outperforming them. So it's not a competition risk. So all the fund managers want to do is pick their asset allocation, probably the same as last year, because nobody generally gets fired for doing the same thing and hitting their target. So the issue you've got is if you don't have people leaving you to go somewhere else because they're outperforming you because they've got Bitcoin, well, you're not really at risk. And the next thing you got to think about is people who do asset allocation for multi-asset portfolios, unless they really, really are trying to prove themselves or do something innovative, they don't have much need to change what they're doing because you could probably guess what you're going to perform based on your asset allocation because you've been doing it all your life. So if you've got a certain target to get your bonus, to pay for your kids to go to school, to pay for your mortgage, well, what do you care? And so that's the issue we've got, especially in this country where without the actual Bitcoiners demanding it from their advisors, the advisors can't demand it from the fund managers, and the fund managers have got no need to change. So I don't think we're anywhere near it in this country, especially. Other countries, the UAE is really forward thinking. America is really pushing it. But most countries, I think, are absolutely nowhere near truly trying to adopt Bitcoin, either as a currency or as an investment product.
It's interesting. I just recently saw, completely unrelated to Bitcoin, a chart which shows where are the millionaires gaining and where's the millionaires leaving. And it's actually,
you might have seen me post it.
Oh, maybe I saw it on your feed, actually. I just saw it on Twitter somewhere. And I think UAE was the first one and US was number 2. So it's funny, the two countries that you mentioned are number 2 and 1.
And did you see who's the worst? The UK. The UK is
the worst?
The UK is the worst. But if you look at the chart doesn't even tell it properly. So we had, I think it's like 15,000 millionaires leaving. But if you then look at the two countries that are the next two worst, well, that's China and India. But they've got 1 billion people. Like we don't have 1 billion people. So I worked out what is it per capita. And if you look at our little population and the amount of people leaving, it's terrifying. So we've got people absolutely fleeing this country with their wealth. And we've got people turning up in this country with no wealth. So there's a real problem and they won't be able to fund it. So if you're going to start, there you go. That's it. So if you look at the bottom, the UK is at the bottom because of the tax changes. And I'll send you this after this. So I worked out what was it per capita. And the UK is so far further worse. There you go. So look at the bottom. But UK loses 244 people per million. And the next worst is Israel, who are carrying war.
Yeah, it's UK, Israel, Lebanon, Norway, and Russia. Norway is a weird one in there.
Yeah. Interesting, that one, isn't it? But it's terrifying to me that the UK isn't just the worst, but is by miles the worst. I just see, where does it go?
It's 5 times worse than Israel. That's
And they're at war.
something. Maybe even 6 times, depending on I don't know how good I'm in math in my head, but something like that.
Yeah. But if you look at the top list, it's all the tax efficient jurisdictions.
I am a big fan of Malta. I've been there for a month to see it. It's a very hot country because it's under Italy, but it has a very nice flair to it. It's something like I might, if people miss me in Austria, I might be there.
Yeah, so that's the issue. At the minute, you've got people in the UK with money to invest are fleeing the UK anyway. So it's not an optimistic environment at the moment, I wouldn't say.
Yeah, and if you have people leaving, this encourages more people leaving it. It's really a bad loop to be in. Oh, yes, you have to set something very drastic to reverse that whole trend. I have to look it up later. I have to find some statistics with Austria because it's such a small country. It's never listed in any of the statistics. So you always have to dig it yourself. Germany and France and UK, they are always listed in those things, but Austria is too small to matter, even.
Yeah, and I think that's, it's just terrifying that how can the UK with already, so this is why Bitcoin solves this, right? So the UK have got 61,000 Bitcoin. The government kind of doesn't even acknowledge them. And so how can they just discard it? And the other issue you've got is politically, they've got no idea. So my friend bumped into Ed Miliband. So Ed Miliband is our energy secretary, right? So my friend bumped into him and said, why don't you use the excess wind energy? So we curtail a lot of wind power. So we pay to not use the wind power. We pay to build the wind turbines to create. So he said, why don't you use it to mine Bitcoin? And the guy's response was, well, Bitcoin's useless. So even if you think Bitcoin's useless, you could sell it for market price 24 hours a day, 7 days a week. So even if you think it's a piece of shit, let's just sell it. Take the money. And then we don't pay to waste energy. And personally, I would keep the Bitcoin. But even if you don't want it, take the wind energy, make Bitcoin, sell it, make money, don't waste money. And we just have such a backward system where I think where you've got in the UK, it's such an old school, because the UK financial sector has been around forever. And it's very difficult to get something that's been around forever to change its mind. Have you ever tried to get an 80-year-old to change his mind on something he's believed for 80 years? Impossible. But if you try and change a 5-year-old's mind on something, it's much easier because they're not so set in their ways. And I feel like the UK is quite set in their ways. The city financial folk, the guys that have been managing money for 50 years, they're set in their ways. So they're not trying to change to go to Bitcoin. The government's not trying to change to go to Bitcoin. And unfortunately, it's not a political issue really in the UK. So they don't have to try and change to get voted in. And they got voted in a year ago. I mean, it's been disastrous ever since for them. There's been U-turns on everything. But still, they don't really seem to be making Bitcoin a voting issue or a useful tool to solve the country's problems. They're just sending the wealthy people away and accepting the immigrants.
And it's I think it's not well talked about enough, the infrastructure play of Bitcoin mining, where the incentive and the game theory around that is so strong that even if you hate Bitcoin, you kind of say it might be a good idea to use that as just an infrastructure play, which is grid balancing and all those things that you can do with it.
Yeah, it's a no-brainer. When you look into it, it's an absolute no-brainer. So there was a really, really good documentary. It's just a news segment. And I think there was a hydropower plant in Zambia which used their excess hydropower to mine Bitcoin, which made it more profitable for the energy provider, which reduced the amount of the cost of energy for the local residents. And it created electricity, which they could use then at night when it got dark. So there was a guy he was a barber, and he was now able to carry on working up until 10 o'clock at night and make more money because he had lights. And so if they didn't use the Bitcoin mining on the hydropower plant to make it financially viable, stabilize the grid, reduce the energy costs for people, this whole little village wouldn't be able to operate out of daylight hours. And so purely Bitcoin mining in that instance is an absolute godsend for those people. And it should, I just don't understand why you wouldn't. Even like I said, even if the energy secretary hates Bitcoin, sell it. Like you could sell it every second of the day. It's just absolute madness that, they just say, no, it's rubbish.
Do you see the whole Europe lagging behind, or is it just specific countries?
I think Europe definitely lags behind for sure. But I think then there's certain countries within Europe that are like Switzerland, for instance. They seem forwardish thinking. There are other countries where adoption seems to be good, or the tax on it is good, which helps people go there. But I think generally speaking, Europe lags behind, especially the USA and the UAE.
Which is dangerous because like there is this institutional dam, this money, Bitcoin basically, kind of reached the escape velocity, kind of reached the point of no return. And if now it's just a question of like who's involved. And if Europe and the UK is not doing anything, America, UAE, and all the other, Russia even, will do probably a lot in there and will lag behind in the long run. And it's not about how successful will Bitcoin be. It's more about like who will be the successful people, institutions, governments, and countries in Bitcoin.
Well, El Salvador is an unbelievable example, right? Look at the difference in El Salvador financially since they started to adopt Bitcoin. I think I saw the other day that nobody's ever been able to just repay the International Monetary Fund or been able to afford to repay it, but these guys now can. But then they're telling them to not then buy Bitcoin. If that's not trying to hold people down, I don't know what is. But I hear all sorts of stories of countries mining their own Bitcoin. I heard a friend of mine was telling me that the country he lives in, I'm not sure I should mention it, but they've got their own nuclear power business. But any excess nuclear power they mine Bitcoin with. So imagine that's cheat code, right? You already have nuclear power and you mine Bitcoin with it, and it's free electricity effectively. And then you get Bitcoin.
I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. And we have right now a summer sale going on for 15% off. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today for $186, and you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin Robin, and you will get a 30-minute free consultation. The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilant represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I feel like almost every country should is somehow mining or buying Bitcoin. If you have a country, you look at the USA actively, openly discussing buying Bitcoin, and they already have some Bitcoin, but like actively buying Bitcoin, even if they're just discussing that has to be a discussion that every other single country has to have. And if they have the discussion, the output has to be, let's just get some just in case the USA is doing that. It's a no-brainer for me. And I always bring up the example of Bhutan. Bhutan is a very small country. They don't have to like hide anything, but they hit for 4 years or 5 years that they are mining Bitcoin. So they mined Bitcoin starting from 2019 and disclosed that, I think, in 2024. So how many countries already started mining Bitcoin, buying Bitcoin without just like saying anything and saying like in 5 years, oh, like we are doing it since 5 years?
Yeah. No, I imagine there's some really, really good ways. So I'd love to find out. I mean, if you find out, let me know. But I think Bhutan was amazing. I think Bhutan's Bitcoin is now like 40% of their GDP or something I read the other day, which is, it's just crazy, right? So it's just nuts that how many more smaller countries need to say, yes, we're doing this, look at the success of it, for the bigger countries to say, actually, maybe they're right. I mean, it's crazy for me. It's crazy.
I thought even it was higher. It was like 70%, but yeah, it depends on like where the Bitcoin price also stands, probably.
Yeah.
But yeah, they have more Bitcoin than El Salvador, and Bhutan is like a very small region.
Yeah, it's almost going to become, I think, eventually become a matter of national security, because imagine that something happens. Let's say the EU, for instance, they have to contribute a certain amount per country or per person within the country to fund, sorry, not the EU, but NATO. They will have to fund it. Well, if you're now significantly less wealthy than another country because they adopted Bitcoin, well, how can you then contribute equally to national security of, keeping your country safe? So it'll all become out of kilter. And so you could if you look back pre-Bitcoin, you would know a country would have to become more innovative, industrialized, technologically advanced to then become more wealthy. And it was almost predictable, because you could look back in history of, if industrialization grew your GDP by this much, it's probably quite predictable going forward what other things might do. But Bitcoin has never just turned up and started knocking out 100% a year returns. So if you then have countries adopt Bitcoin instead of growth on technology, for instance, well, you don't quite know where that's going to get to. So they could become significantly more wealthy versus the other countries. So then that has a huge role in geopolitical dynamics of who now is in charge, because usually it's, the richest and most powerful countries, generally like America, try and dominate the world. So if you've already got America or China trying to be the most powerful and dominate the world, and they also adopt Bitcoin, well, how far behind do the other countries then become relative? It's just terrifying.
And for me, the biggest point is always there are so many countries with so many different conflicts, not even mentioning the wars, just the small conflicts that are going on with like trade things and stuff like that. They all don't trust each other. And then a system that doesn't have to be trusted is the only solution at that point. They're like, hey, like, I don't know if we should put like the US dollars on the balance sheet or like this on the balance sheet, because I have no clue if we can even trust that. Let's put something on the balance sheet that we don't have to trust because nobody can manipulate it.
Yeah, absolutely. It just makes for a more, clean world, right? Everyone doesn't need to trust each other. You're just honest.
The Jason Laurie thesis, I think it's kind of the best one to fit there.
Yeah, it's like forced honesty, isn't it?
I love that. You also mentioned before we recorded, I think, that you switched to Bitcoin only. How did this shift come to be, and like why was it so important? And I really want to stress that because I know a lot of companies in the Bitcoin ecosystem that are really portraying themselves as Bitcoin only. They are sponsoring Bitcoin things. And then you see what revenue they're doing. And they're like, yeah, we're doing like 40% of our profits in some staking model. And like what the fuck is going on?
Yeah. So this is an evolution, really. Like, I don't think we ever set Jacoby up specifically to come this, but I think it's a bit, we've evolved into it. And I think there's a couple of things that have led us to this point. One of which is, in my wealth management days, my morality was if I would do something for either my mum and dad's money or my wife's money, I would then advise somebody, yes, I think you should do this. If someone says to me, I want to buy some cryptocurrency, what should I buy? Well, my response would be buy Bitcoin, especially if you wanted to use it for long-term wealth creation. Now, I go back to my wealth management days. Investing and saving money is for long-term wealth creation, to make yourself wealthier, to give yourself more choice of what you want to do with your life, to give yourself freedom, and then you can have the life you want because you're financially able to do that. And so saving and investing for me is about giving you those choices. Now, if you want to try and trade something and get like an overnight lottery win, that's highly unlikely. Warren Buffett would say, like, it takes a long time to get rich by investing. And I think Bitcoin is a real helpful tool for that. And I think if you look at the staying power Bitcoin has versus the other cryptocurrencies, I don't really see anything I would suggest to somebody else as a sort of a 5, 10, 15, 20, 25 year investment that I feel would definitely be around in those years. So I liken this to tech stocks and gold. So I don't know. And if you say now, like, what's the most profitable tech stock now? Well, 15 years ago, you would have been it'd have been amazing if you managed to call it. And you don't know now in 15, 20 years time, what's going to be the best tech stock then. But you know, gold's going to be around because gold's been around for 4,000 years. And for me, that's the difference. And I think if you want to trade something and try and make some money very, very quickly in a volatile environment, well, trading other cryptos might be fine for that. But if somebody said to me, what should I buy? I don't know the answer to what other cryptocurrencies you should buy that I can fairly confidently say you're going to make money on over 15, 20 years. So that's what kind of led me to, I think Bitcoin is the only thing I would put my own money in. And Bitcoin would be the only cryptocurrency I'd certainly put my parents' money in or my wife's money. So that led me to think, well, I think we should be a Bitcoin asset manager. And then we should create variations of Bitcoin products for people to suit their comfort levels. Now, I don't think most investors would say they should be 100% into Bitcoin. So they need to then think about, well, what is their level? And so let's say, for instance, somebody decides they should be 20% exposed to Bitcoin. Well, then we need to create a product that's 20% exposed to Bitcoin, but then that's then rebalanced properly. That suits their comfort level properly. Because if they did it themselves and they didn't rebalance it, and let's say, just say easy numbers, you had 20% Bitcoin, 80% stocks. Well, the Bitcoin generally is going to outperform the stocks by quite a margin. So very, very quickly, you're now not 20% exposed to Bitcoin. You're probably 30 or 40% exposed to Bitcoin, which is outside of your stated comfort zone or level. So that needs rebalancing. So I feel like there's a huge market for Bitcoin products to be adopted for people's comfort levels, which is completely underserviced at the moment. And if I were going to invest in something, I'd want to invest in it, then I'm going to know it's going to be there in 5, 10, 15, 20 years. And I personally am confident that the Bitcoin I hold, or the Bitcoin ETF units I hold, or the Bitcoin treasury companies I hold, I think they're going to be there in 10 or 15 years. If you ask me, is Ethereum going to be there? Solana going to be there? I don't know. Farcoin going to be there? I don't know. There might be. There might be some really good new ones. There might be some really, really, huge, amazing things that happen. But I don't know right now what they are. And so I think Bitcoin is the safest bet in the digital asset space, and it's the foundation of the digital asset space. And I would imagine other stuff will trend downwards versus Bitcoin. And so that's why I decided we should be a Bitcoin only asset manager, because that's what I would personally do myself. So therefore, that's what I'm personally comfortable telling people to do.
I love that. And I'm almost certain that in 15 years, all those coins do not be around or not an alleged size.
There could be some amazing inventions, but you don't know that. You don't know what they're going to be. You don't know whether they're going to succeed. If you look at where Solana's are like, what, 150 at the minute, all-time highs of what, 295. Why is it? And I know they always say the alt market lags the Bitcoin, bull market, but you can't really know that. And I almost think the treasury companies are stealing sentiment from the alt market. And so then what happens? So I think everything eventually will evolve around Bitcoin, whether it be Bitcoin treasury companies, bit bonds, Bitcoin being weaved into, mortgages or whatever. I think that's going to stay forever. And the other stuff, some of it might do great, but most won't.
Treasury companies are absolutely stealing thunder from altcoins like that. That's amazing to me to witness. It's also all the people that don't care about the sovereignty and the freedom technology, and they just want to have number co-op technology. They are flocking more and more to treasury companies rather than to altcoins. And in previous cycles, they just went to altcoins because they were like, hey, I want to get more Bitcoin. And this narrative is kind of completely dead this cycle. It's still a little bit there, but the treasury companies are kind of stealing like 80% of that thunder. And I think next cycle, it might be completely gone.
Yeah, I can see it. And I think if you look at the all-time highs, really, they should track each other. If you look at, I don't know, oil stocks, or if you look at tech stocks, they all generally follow each other. But it isn't at the minute. And I know there's, historically been a lag, but I'm not sure it's just a lag this time.
It's also interesting when we think about people like Brian Armstrong or Winklevoss brothers who sell a lot of crypto, a lot of altcoins on their platforms. But when it came to recommending to the US president what should be the strategic Bitcoin reserve or crypto reserve, they all came out and said, only Bitcoin. Only put Bitcoin in there.
Yeah, that is such a great example. So they've got their crypto stockpile, which is just seized cryptocurrency, which they can keep, but they can't buy any more. But they can buy Bitcoin. So that is a very, very clear distinction for me. They could, if they wanted to, sell the crypto stockpile to buy Bitcoin, but they could never sell the Bitcoin to buy the crypto stockpile. And that is the clearest indicator for me. That's the way the world will go. And I know, I know there's, some Ethereum maxis, there'll be Solana maxis, there'll be all sorts of other maxis and all sorts of things. But when the institutional world come in and the countries come in and the governments come in, the decentralization of Bitcoin, the fact that there's actually nobody in charge of it, the fact that it can only be mined a certain amount per day or week or whatever. So if you look at the gold market, gold only increases in its total market cap in terms of the gold in circulation by 1 to 2% a year. So that's why gold for 4,000 years has been valuable, because it's hard to make it and it retains its staying power. So I think the characteristics are Bitcoin and gold, very similar. Cryptos and tech stocks, very similar. And for a 20-year investment, you're probably going to be predictable about what gold will do, because it's been around forever. It'll be very difficult to pick who's going to be the best tech stock in 20 years' time.
Yeah, and people are confused with that, because I see it 100% like that. But when I tell this to people that aren't into Bitcoin at all, they're like, "Hey, Bitcoin is a tech stock," because Bitcoin is kind of getting adopted, and of course there's a volatility in there, which this year volatility is honestly very little. When you look at the charts, it's not that crazy compared to like 5 years ago, and. But still, people see it as that tech stock and this volatile small thing, just because it's getting adopted and getting to the state where gold is, and that's why people confuse tech stocks and speculative assets with Bitcoin, which Bitcoin isn't this.
Yeah, no, I agree. I think it's, if you could have invested in gold when they first realized gold is a store of value, well, you'd be very wealthy right now. And I think that's the same sort of place we are with Bitcoin. And I saw a really good chart yesterday, and it showed that we're like 3% adoption, and it showed you where other things were when they were at 3% adoption. And I think the internet in 1990, smartphones in, I don't know, 2000, social media in 2005, that is really, really important to me. And that's maybe where people liken it to tech stocks, because they liken tech adoption in the last, however many years has been the thing you'd mainly look at to see what's been adopted quickly. If you look back 100 years or further than that, you may be looking at car adoption or, I don't know, washing machine adoption. So I think it's likened to tech stocks because they're the most recent examples of something that got adopted very quickly and then went to escape velocity like we were talking about earlier.
It's a good one, yeah. I like the comparison with like gold, and it might go like there's all those charts and all those things trying to predict or like how fast this transition is going. I have no clue how fast it will actually go, but I feel like with Bitcoin, with absolute digital scarcity, which we never had, which has a global demand of like 8 billion people. We in the episode, we talked about how much capital there is still not even able to get into Bitcoin, or just got started with being able to be into Bitcoin. That's just like all those things can happen very quickly. It's like in a matter of like 10 years.
Yeah, totally. And I think if, let's say America do then have a Bitcoin strategic reserve and they publicly say that, well, then it won't be very, very long until all the other countries have to. And if you look at, it's only now that Bitcoin is getting like the big ticket purchases. So if you look at any technology, is usually invented by, let's just say like the CIA or something like that, right? Then it would feed into government. Then it would feed into other countries. Then it would feed into corporations and institutions. And then eventually retail investors would be able to start to use it. Well, Bitcoin's been the other way around, right? So Satoshi, whoever he, she, they are, invented it. Then it was computer scientists. Then it was sort of libertarians and freedom fighters and people that didn't want to be controlled by the state. Then it was early investors with maybe a tech mindset. Then it gradually filtered into more normal finance kind of investors. Only now is really institutions, countries, companies starting to adopt. But the institutions, the companies, and the countries are the guys that can write the big checks. So demand is only really going to start now at this point. Because previous demand, it was never a country buying 1 million, right? It was never treasury companies dropping, millions and millions a day into it. It was just people and their money. So now the institutions are starting to come and the countries are starting to come when there's already been 95% of the Bitcoin already mined. So it's only really now the demand will ramp up, I think anyway. And we know where the supply is. It's nowhere to be seen. There's nowhere near enough supply to satisfy the demand. And there'll only be so many people that are willing to sell their Bitcoin at the current price before it's got to go up. It's got to go off into price discovery. Then we'll find a new level. Maybe people will be happy to sell at 130, 140, whatever, but then they'll run out and then it'll go again. So I think these things can happen very, very quickly, especially when you've got huge ticket orders coming in from actual countries and treasury companies and, institutions. If you, for instance, had 1% of that £4 trillion in UK pension and investable asset money, that's massive. And so that's just one country. So God knows where this ends, but it's certainly only really, in my opinion, getting going.
For me, the buying behavior is now so different than like just 4 years ago with institutional adoption, because they don't really care that much about the price. They're just buying. They have a strategy. Retail folks are a lot more emotional driven. They are like panic selling. They are like FOMOing into something like that, a company, a strategy. Like they're not as emotional driven because there are more people at the table and they are doing decisions and strategies. What do you expect from that changing for Bitcoin, low volatility, or like changing the cycles? Like what is coming from that?
Yeah, I think it'll change the cycle. I think traditionally people would all start to think, right, we're at the top, and they would sell. But the problem is there's probably not that many people to sell to because everyone will be selling at the same time. But the treasury companies don't care. They will buy, and then they'll buy again, and they'll buy again. So if I was a treasury company, or I was a country, let's say, and I wanted to buy a massive load of Bitcoin, well, I personally, if I was, I don't know, let's say I'm the UK government, I'm going to build a strategic reserve. Well, I would probably set my purchase order at 10% below the market trading price. So as soon as Bitcoin starts to dip, well, it'll find a buyer, and so therefore it'll bounce back. And then I think the buying power of the treasury companies, plus the countries and the corporations that are starting to buy in great number, I think that will mean that the decline is very different to what it's been before, because you won't have the free fall. I just don't think there'll be the free falling situation anymore. Because if I, as I said, if I was an institutional investor or a country, I'd say, right, cool. Well, you capitulate. I'll pick up your Bitcoin for a price lower than the market price because I know I'm keeping it for 20 years. And some of the people that will be selling Bitcoin now, they might have already been in 15 years. They might have been in 10 years. They might have been in 5 years. So they've already made a load of money. So they may be happy to come out at this point. Whereas the new entrants, the treasury companies in the countries, well, they're only just getting in. So they've probably got another 10 years of it they're willing to ride. And they've not made loads of money yet. So I think the guys coming in now will soften any kind of downturn because they will buy relentlessly at whatever price. The treasury companies don't care. They'll buy every day. Saylor doesn't care. He'll buy every day. And so the price almost doesn't really matter to these treasury companies. They'll buy anyway. If it dips, they'll just buy more and then it'll bounce back.
Yeah. And I think that's also something that the people don't really realize, that the buying behavior and the people that buying Bitcoin now are different than from 2017. And Bitcoin is so much bigger than 2017.
Well, even if you look back at when FTX crashed, well, that was an exodus of the industry because the systemic risks that still seem to be inherent within it, even though FTX was a human problem. Like you would never have looked at the Madoff scandal and said you can't own dollars anymore. And it was a confusion about that. You would never have done that, would you? So because you had a fraudster or a bad actor in a certain currency, we can't blame the currency. But that caused a lot of people that were maybe starting to take an interest to flee. But now they're back because they've seen that Bitcoin, and especially Bitcoin, it doesn't matter what's happened, what scandals there have been in the past, it's resilient. It's carried on anyway. And I think that has given a lot of institutions and companies and countries confidence that even if there is a downturn, well, it'll just carry on anyway. And so the buying pattern is different and the profile of the buyers is different, which is why I think the outcome of the cycle will be different.
I very much agree with that a lot. And I'm really looking forward. I think people will be surprised if we look in 2030 back at what happened the last 5 years. I think most people will be surprised by how quick things escalated and how smooth things went, because a lot of people think like there's like a lot of challenges and like things along the way, but the major challenges we already overcame. We overcame a civil war within Bitcoin with the block size wars. We overcame the SEC. We overcame the richest man alive with Elon Musk buying and then dropping it again and shitting on it. Like we overcame a lot of things already.
Yeah.
And now we proved it, and now we're just ready to go.
Yeah, and I think the longer these things happen, if you look at long-term equity markets globally, there's always something bad that happens. The market dips, then it recovers. Then something else bad happens, then it dips and it recovers. There's a brilliant chart. I'll find it and send it to you. It's called the Wall of Worry. And there's a wealth manager in Dubai who a friend of mine works for, and she sent it to me. And they show you the global equity market since, I don't know, like 1900. And it pinpoints every disaster that ever happened. And then it just shows how the chart just carried on anyway. And the Bitcoin chart, when you look back, we'll have a wall of worry. And you'll say, right, this is, this bad thing happened. The tariffs happened. FTX happened. But it just went on anyway. And that's not, it's so common for equity markets or any investable asset to go through good and bad times. There you go. Look at
Is that it?
It's very, very similar.
That's
Everything bad happened, and then it came back anyway.
That's a cool chart.
This will carry on forever. There'll always be a new bad thing.
Yeah, there's always some crisis, something coming up, and I mean, COVID was like a really big one. The 2020 area where we had a complete crash within weeks, and that complete recovery within like also weeks and months, and we went from the starting of the year to the end of the year. I think the S&P 500 went up. What was it? Was it 40%? It was some crazy high number, like higher than it usually goes up, just because like scarce assets will go up if money is being printed.
Yeah. This is a good bit. I like that they've got different colors, like economic crisis, conflicts and terrorism, health crisis, political events, and environmental and other disasters. It just shows you that there's always something bad will happen. It'll always affect the market momentarily, then it'll just carry on.
That's a great way to look at it. We have one question that I ask actually each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Oh, well, I think I'm in I like my environment I'm in because I've spent years and years advising actual people on how to grow their long-term wealth to give them the life they want. So when you're talking to individuals, before you even ask about any money, you kind of need to know what do they want to do with their life, and how can you then help them give them that life they want because of your financial understanding. And so what I really, really like is helping people understand what do you actually want to achieve in your life. And typically most people's lives are very similar. You want to have a nice house and children, and you want to spend time with your family, go on holiday. But nobody really then says, well, how do I fund this adequately in a tax efficient way with investments that I'm comfortable with? And so I really love to talk about that sort of stuff and how Bitcoin now turbocharges every little bit of that. So if you want, for instance, typically in your life, you start working, you have surplus income. You get married, you have children, they cost a load of money. So you then don't have any surplus income because you're paying for your family and your life. Then as your children get a bit older, you can kind of kick them out, they become less expensive. Then you have surplus income again to pay for trying to stop working one day. So if you then start to think, well, where can Bitcoin help me here? Well, Bitcoin can help you because it can soften the blow of the expensive children that you have because you're now wealthier. So instead of having to spend all your income on that, well, you don't have to so much because you can use the Bitcoin money growth that you've already made. And then so your life in that period of time becomes more comfortable because you're not meeting your costs with your income and having nothing left. And then similarly, when you want to stop working one day, and how do you go about doing that? Like what level of funding do you need to give yourself income to do that? People don't even think about that until they're too late usually. But if you can start adding Bitcoin to that, that means that they can either retire earlier, wealthier, or not have to save as much on a regular basis, so they can live a more comfortable life, but also still have all the objectives that they already told you they wanted. And I think human nature generally leads people to get fulfillment out of the same things, and that's relationships, love, your family, children. And what I love to look at is how can we use financial products and Bitcoin to give people that? Because at the end of the day, you want to be happy when you go to bed. You want to wake up happy. You want your family to be fine. And how can we use finance and Bitcoin to give you those intangible feelings?
I love that. And financial advisors, so far, like there's not a lot of financial advisors that are into Bitcoin. So far, I think there's like I had like 4 or 5 of them on my podcast, and they all say it's a hard place to be because you don't get love from Bitcoiners, you don't get love from financial advisors.
No, that's why I get a bit more love now. I've fully crossed over into the Bitcoin world, but yeah, I love that sort of stuff. And I think the other interesting point of that is financial education, and education from Bitcoin is so important, but fully financial education is so important. So if you think about when you're at school, the sort of things you learn about is wide. Like you had a really varying things you learn about at school. Most you never actually use as an adult. Now, what things do we all have to do as an adult? Well, 100% of adults have to, in some way, shape or form, deal with some kind of financial planning. So how is that not? Like, how can we have 100% of people have to do something, but they don't learn about it? That's insane. So I think financial education, and I think that ties into the other stuff I was talking about, that if you understand money and investing and saving in Bitcoin, Well, that then gives you more of the life you do want, because you don't have to worry about the other stuff. And that, I think, is really, really important. Education is such an important thing. And I think we will be driving financial education through Bitcoin education as much as we possibly can, because that's what's going to drive adoption.
That is an interesting way of looking at it. Like, everyone has to deal with financial planning, but nobody gets
how
it.
do you not get forced to talk? Why are you not forced to learn about that? And, is it because they don't want you? Is it because they don't want you to know what to do? Does the government want you to be reliant on the state? Do they want to have to bail you out? Like, it doesn't make any sense whatsoever.
And I'm a human being that always tries to, like, I'm very positive minded. So, like, I'm always thinking that people are well intentioned and they only want the best for the other people. And some might just be, they just are well intentioned, but not lucky in the execution. Like, let's put it that way.
Yeah.
But with that, it's like, yeah, if you want to design a school system, like, financial planning is like a huge part of it. And I've been to school in Austria quite long. And the only small financial thing that we've learned is picking stocks, because we had one economics professor that had a passion for that. And this started my whole journey of investing in stocks, then coming to Bitcoin and taking my financial life series. And that one professor kind of ignites the investor. Like, he did not teach me a whole lot, but he kind of started the journey of learning about it.
Planted the seed, didn't they? That's all you need. You just need a seed to be planted in your mind. Some people won't care, and they'll go off and they'll do whatever they want to do anyway. But if you could get 2 out of 10 people to care and take an interest, well, that's 20% of the population that now are independent from the state, from welfare, from needing to be bailed out at any point in time.
And how much stronger does this make a state? Like
if you know that, well, this guy probably won't be dependent on any welfare because he's always going to have a job, because he could have a job in investing, or he could save his money adequately enough that if he did lose his job, well, he's got an emergency fund to allow him to then go and find another job without having to seek any benefits. Therefore, he stays out of the downward spiral of going broke, going bankrupt, going on benefits, not being able to get a job. So there's so many things that could just be eliminated just by making somebody say, right, this is how you save money. This is where you're going to pay tax. This is what it all means. But it's just never even mentioned.
And I think there's something, I mean, the sovereign individual describes it probably best. But before the internet, before we kind of all got globally connected, it was harder to switch countries. It was harder to remote work. It is harder to like now you can work remotely from anywhere, and you can just get paid in Bitcoin. It doesn't matter where you are. You don't even need a bank account. Yeah. And in that situation, government kind of lost, like those little sheeps got flies and wings, and they can now fly wherever they want. And now when we come slowly in this world where the sheeps got wings, the governments have to compete for the best sheeps to come to their jurisdiction. And this starts from education, because people are like, where can I start a life where my kids get good educations? Where can I start my companies for like low tax, low bureaucracy, and all those things? And I think I'm just too optimistic, but I think the world will be very nice, and will, like, if you look back, and I know there are a lot of negative people out there, but if you look back 100 years comparatively to now, I think the world and the life that we're living is a lot better. Not just in Austria with things that happened for like 90 years ago, but like in general, all the technology that we have, all the things. I think almost everyone in the audience right now can take a plane ticket wherever they want to.
Yeah, exactly.
A few hundred years ago, not even the richest man alive could do that. So I think we're entering a really fun world, and if we steer in a positive direction, I think we steer in a good direction.
Yeah, totally. And I don't know if you saw when we were in Prague, when we obviously were on panel together, The next morning, I think Dominic Frisby was on. I don't know if you watched Dominic Frisby's keynote speech and his presentation, but he had some interesting slides about the percentage of the workers now that are going to be globally remote workers. And it's in a massively, massively growing sector. And so the more people can work remotely, the more there'll be global people, and the more they'll need a global currency. So it's a really, really interesting point you raise. And there's some incredible stats that back it up. And countries that are willing to facilitate global freelance workers, the more they'll attract.
100%. Yeah, Dominic Frisby actually will come on the podcast in a few weeks. It will take some time, but I always set an appointment with him, so it will be fun because, like I think a day later, a day after we were on the panel, I was with him on a dinner. So well, he's a great guy, and I really want to have him on the podcast.
You should get him to. I've been trying to get him to do a Bitcoin song. So I don't know if you've seen his songs, but he sings like comedy songs. And I was telling him he needs to get a Bitcoin one.
He definitely has to, yeah. Yeah, we have an end routine in the podcast where the previous guest is asking a question before, without knowing who the next guest actually is. And the previous guest asked you the question, what's the worst part about being a Bitcoiner?
So really, I love being a Bitcoiner. The worst part is that you find yourself really trying to help other people who seem too stuck in their ways to be helped. Now, in certain instances, like it doesn't affect my life if my next door neighbor buys or doesn't buy Bitcoin, right? So it's not as if I profit from it. I'm not selling him Bitcoin. But when you want to try and help somebody understand something new to help themselves, it's really, really frustrating, I think, when you're met with sort of blank ignorance. And I think we get a bit of that, especially in the UK. I find people are unwilling to even listen. So you get to the point whereby you want to help people, but then you also put, well, why am I putting my effort in to help somebody that doesn't want to be helped? And so you're sort of stuck in a bit of a trap sometimes, I think. And that's I say that's the worst, but it's not that bad.
Yeah. There's also another good point, but it's actually not that bad but it's a really hard question to ask actually, because like what is bad about being a Bitcoiner? The only bad thing is that the worst part about Bitcoin not being a Bitcoiner, but about Bitcoin is that even your worst enemy can have it. So it's like permissionless, but it's a different kind of a question. It's really hard. Like it's one question. Like usually I wouldn't have a hard time answering the question, but this is a thing
it's a hard one, isn't it?
It's a hard one to answer because there's like your life gets better being a Bitcoiner.
Yeah, no, I think it does. Yeah.
Perfect. And thank you so much, Peter, for being on. Before I let you go, where can people find you, ask your questions, and reach out to you?
Yeah, so I'm reasonably active on X now, or Twitter, whatever you want to call it. So reach out on that. Jacoby's got a page. I've got a page. From my old school days in traditional wealth management, I'm fairly active on LinkedIn. If I'm not sure everyone, even crypto people, Bitcoin people, some of them don't even know what LinkedIn is, I don't think. But there was a world before Bitcoin, and that's where we were. So you can find us on all those socials. I generally love the Bitcoin community on Twitter now. It's just such a great place to learn new things, see who's innovative. It's like I'm sure you know James Van Straten. James said the other day, Bitcoin Twitter is 5 years ahead of the rest of the world, and I absolutely agree. Absolutely agree.
James was on, I think, probably like a couple episodes, like maybe 2, 3, maybe 4 weeks ago, something like that. If people want to find it, it was a fun episode with James. Yeah, thank you so much for being on. I do agree. Bitcoin Twitter is an amazing place. It's my longest platform that I've been on, posting and shitting about, and I think it's a great platform. And thank you so much, Peter, for being on, and also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye bye. This content is for educational and entertainment purposes only and does not constitute financial advice.